Mr. Dustin Garrow, how are you, sir?
Doing well. As you know, we're still in Colorado on our way to Arizona, but little snow coming in tomorrow, so winter is still with us, but that's okay.
That's okay. Okay. I think I spoke to one of your future neighbors
Yeah,
yesterday, Devon Dawa.
that's
He's
yeah.
he and a few others. The Iranian boys are running off to Scottsdale, it seems.
Might as
Good
well be
goal.
warm while you're at it. So anyway,
Absolutely, absolutely, absolutely. Hey, well, look, thought we catch up. There's a lot going on in the market, a lot of uncertainty, a lot of unknowns. But one thing we do know is that the spot price is not moving for anyone. So we're going to talk about maybe some of the reasons around that. What did you pick up in Montreal when you were there?
well, again, the World Nuclear Fuel Cycle Conference was held in Montreal last week, and that's co-sponsored by the World Nuclear Association in London and Nuclear Energy Institute here in Washington. So, an annual get-together, well attended, 300 participants. Of course, all the suppliers, the traders, some investing groups were there represented, all the U.S. utilities, of course, but also some foreign utilities. We saw Tokyo Electric, Kansai Electric from Japan, Taiwan. They haven't been around for quite a while. Emirates, they were there. They tend to only go to London, but attended this conference. So, but the sense was, Matt, the theme was kind of looking now at the fuel cycle and try to get it to match the growth profile of nuclear. And in fact, the director of the WNA in her closing comments said, without fuel, we aren't going to be able to attain the goal of tripling nuclear by 2050. So we're kind of now in that phase of the market where there's a increasing realization, certainly from the utility side, that with conversion enrichment, all of that, they've been focused on quite a bit since the Russian invasion. But now, uranium, you really need to start looking at it a little more seriously. And, the market, quickly on the term, we're coming to the tail end of the restart phase, which we had talked about. So we have MacArthur up, Langer Heinrich, Alta Mesa here in the U.S., a number of, previously operated mines that, have had some startup issues. I saw a statistic someone put together that they fell short of their anticipated production about 3.5 million pounds last year. Not a huge amount, but then you have to either renegotiate deliveries or come in the market. And I know Encore announced that they bought some material. So, the restarts will get there. I'm not too concerned about that. We have Kalakira with Lotus starting up in the third quarter, which has kept them in the term market. They're still looking for some, I think, additional contracts. But now we really have to seriously look at new greenfields uranium mines. We've talked about it for years. There was a long list. And really between now and 2030, maybe 2031, we really see a pretty small group that could, basically finance, build, and start operating new greenfields projects. But what we're seeing is the utilities are a little reluctant, let's say, to go forward with term contracts at the current $80. And it is kind of interesting, I think, that we started last year at 68. And by the end of the first quarter of last year, we were at 80. And so the supply sector has held that $80 number for over a year. And some of the discussion is, well, gee, they just need to lower their term price expectations. But to me, what it shows is the supply curve going forward. As you begin to look at new, larger projects, put MacArthur aside, but, you're now talking several $100 million investments, some 2 billion or more when you look at Rook. And so we're now at that, point where projects need to start moving forward. I think, from the podium in Montreal, there was a very consistent story. And it started with Cameco. Tim Gitzel was on the first panel, and he said, when the market calls for pounds, we will respond. And it's not doing that right now. We had representative RBC Capital Markets, Arthur Wong, and he made the comment that the next 5 to 10 years, they see a real supply challenge. I mean, nobody wants to get to, we'll have shortages, because they don't know that quite yet. And then UX gave a presentation, which we'll get back to in a little bit, and basically said, the commitments aren't there yet. Production's not moving forward. I mean, it's beginning to improve based on the restarts. But again, when you look forward, depends on what you think demand will be. If you don't think there'll be more reactors built, then you only have to fuel the current fleet. Very few people are taking that position. It's a question of how much, when. But yeah, the spot market. I mean, we've talked about it endlessly. Totally dominated by the financial guys, when more than 90% of the volume is transacted by traders, hedge funds. We're not talking producers and utilities to any great extent. But yeah, the price, we saw a significant weakening at the end of last year. And I've heard all kinds of reasons for that, the ANU trading inventory, which was the Kazakh-owned trading company, a couple million pounds, was trying to find a home. I've heard that it was sold in one tranche, but just the fact that it was out there led some of the buyers to think the price was going to weaken, so they stepped back. Uncertainty over tariffs, which we can talk about, but President Trump is just all over the tariff issue right now. So there were a number of factors. Certainly the sequestrers, both Sprott and Yellowcake weren't buying. So you didn't see that demand anywhere in the market. End of year, sometimes those holding a bit of inventory want to monetize it. So again, I think we had a series of factors that come in. Now, the question is this the new normal? In other words, is $65 a reasonable and real price? There are some utilities in particular that are saying, well, it just shows a market was overheated at the average of 85 last year. I don't think that's the case. There's more market participants on the other side saying we're going to see price strengthening. Will it go up quickly? Remains to be seen. But the financial guys at this price level could easily come in and buy some more. The traders, the utilities. Again, I met with several big utilities in Montreal last week, and a couple of them said, to fill some gaps we have, we'll come in the spot market. Producers that maybe don't meet their production targets and have, a lot of term deliveries coming up, they may come in and buy. So the sense was we'll see a more upward demand pressure. And I'm still being told not a lot of supply. I mean, if you wanted to buy 1 million pounds today, you'd probably have to put it together with 3 or 4 purchases. So it's not that it's available, but not in big volumes from any one seller. And the other thing, Matt, is carry trade. Okay, we haven't seen that for several years. And in fact, it's raised a lot of question on what is it. And it really comes into being, as you know, when the term and the spot have a big differential. And what the traders do, I've identified about 4 of them at least, they come into the utilities and say, hey, you can buy at 65, carry it at 7%, which one utility told me that's their carry. But we'll commit to deliver it at 70, escalated, maybe at that GDP 3%, maybe 3-4 years out. Well, that beats a new term contract because that 80 would be escalated at 3%. And so what they do is commit to make those deliveries, and then they come in the spot, buy the material at 65, and then they carry it at their interest cost. So we're seeing more of that right now. Now, the point is, though, that's not huge volumes. I've talked to some of the utilities that have been doing carry trade, and I said, well, you're not looking at millions of pounds. They go, no, a couple 100,000 pounds. One of the big U.S. utilities did a deal maybe 2 months ago, 500,000 pounds to be delivered 29 and 30, so split between those 2 years at below 80. So they said, well, that is better than a new term contract right now. So we're starting to, but then the carry traders have to come in. Either they've got some inventory they'll dedicate or they'll buy. So again, there seems like there's a number of demand factors that we're likely to see come into play. And the market's gone up a little bit just over the last few days, but I don't think 65 is a long-term new normal
There's
for
a
the
lot you
spot
covered there,
price.
and I'm going to come back to you on all of those things. I've made a lot of notes. Can we just understand the spot and the trade market? You're right. We've talked about it a lot, right?
Sure.
But someone said to me the other day, so, "How does this work?" And I explained it to him. And this is like a guy nothing to do with the nuclear uranium space. He said, "Well, that's the term price is 80. Yeah, it's about that at the moment. Spot price is what? Low 60s. Okay. So explain that to me." And I tried to, and the more I explained it to him, the less I realized it. The more I realized it didn't make much sense to me. So who's selling spot at those sorts of prices at the moment? These are just traders? How does it actually work? Because the guy came back to me with, and he said, look, he does some work in West Africa. What they do there is some entrepreneurial individual go and buy a pack of cigarettes, 20 cigarettes. He'll pay $10 for it, and he'll split the pack up, and people come and buy cigarettes on a single unit basis. I can only afford one. I can't afford $10 for a cigarette, but I can afford one cigarette, and the guy sells it to him for $1, right? So he's makes money. So on a unit cost, makes he doubles his money. Well done him. We're selling the kind of spot here at less than we would do on a large kind of contract basis, right? That's the term contract. I'm going to pay $80 here for each pound of uranium, but if you sell me smaller amounts, I'm going to charge you less. The guy on the corner of the street selling cigarettes seems to have more common sense than this sector.
Well, yes and no. Again, I like your analogy, but there might be an endless supply of cigarettes somewhere out there in inventory. Again, the spot market is, it does affect the term because it impacts equities. And so, right now we talked about the capital availability for new construction. I don't think anybody's going to raise large volumes of equity in the current market. And that's driven by the spot. Okay. Now, who's selling? Generally, if you look at last year, 93% of the sales were by intermediaries. Okay. Now, the price was higher. So you say, well, did they buy it at 85 and they're selling it at 65? Maybe they bought it at a lower price. They've been sitting on it for a while. They need to monetize some of it for other reasons in the overall global economy. Who knows? But we're not talking big volumes. What UX through the first quarter now has got 11 million pounds in 3 months in the spot market. So we're not talking a robust spot market. And I'm still convinced it's based on supply. Again, if somebody wanted to come out and say, I'll buy 2 million pounds, that price wouldn't be 65. It'd probably be 72. I mean, that's how volatile that is. And the participants kind of know that. If you're Sprott, you're not going to try to raise money somewhere and, well, we're going to hit the market like we used to at £1,000,000 a week, because they know that it would be difficult to put that together. That's why, again, it's such a atypical market right now that I don't think it will stay in that kind of a differential for an extended period. And I don't see term dropping. Again, there is, again, that idea of dropping your ask price. The greenfields projects need higher prices. In fact, that was another thing that I saw an interesting statistic is the restarts. The cost structure from what was predicted to what's been experienced, 45% in some cases. So we're going to be able to do it at X. Well, it's X times 1.5. So again, and stakeholder expectations. There's been a lot of investors that have been taking the long march with the producers, and they're not going to settle for a 5% return. They want to see some nice differential on their shares eventually. So I think that's keeping the suppliers, gives them some steel in their backbone that, we're not going to run out there and start signing a bunch of lower cost contracts, which may come back, as they always do, to haunt you in the future. I mean, we won't get into that. We've talked about it before. So, the markets are different participants, different business models. That's, one thing that was discussed recently is Montreal. The spot has financially driven guys. And how do you predict that? I don't know how you predict a spot price a year from now, let alone 10 or 15 years that we see in some cases. I think it's not very valid. So that's kind of where we are. And the term has generally held up, and we're just waiting to see the utilities if they decide they want to cover. Because I think, what I found and what's been reported is the U.S. market still the largest, still the most uncovered, but generally out to maybe 28, late 28 into 29 is when you start to see larger unfilled positions. In fact, one of them I talked to said, I'm pretty good through 29, but boy, after that, my unfilled component goes straight up. So they're buying kind of that next 3 years to see what happens with Russian deliveries, with tariffs, with production in Canada, with Kazakhstan. I mean, they've got that list that doesn't get shorter. It keeps getting longer. And so they tend to, as a group, step back and go, well, there's so much uncertainty. I don't want to make a bad decision on the pricing and then have that commodity drop in price. They're much more concerned about that than I'll take the risk that I have to pay a bit more to get more clarity. So that's kind of where we are, a bit of a standoff as it's been characterized in the market.
Absolutely. And I'm sort of want to kind of bring some sort of structure to this conversation, because there's so many variables to this when we're going to lose people who are kind of new to it, and we don't want to kind of scare them off. So look, I think in terms of doing that, so let's talk about sort of current market conditions and challenges, and obviously something going on. You mentioned some of those things, tariffs, etc. We'll look at the supply chain, because this is absolutely 100% a supply chain issue. In the geopolitics comes into that, financing comes into that. Lots of things come into that, and I think it's the bulk of this conversation will be about that. The spot versus term market. We'll talk even more about that. Let's look at demand fundamentals. For me, it's one of those things where I've said this a lot recently, which is like, we don't need any more demand. There will be more demand, but we don't need any more demand, because the big problem is supply. How the hell do we actually supply into the current demand, right? I think we talked a little bit about some of the other players that came with certainly some of the catalyst discussions of this earlier this year and end of last year with these AI companies and data centers and blah blah blah. I think that they've been called hyperscalers. That money, is it going to be used upstream, downstream? Is anyone sharing? We don't know. We'll discuss it in a second. I caught up with John Champaglia yesterday and just kind of found out where they're at and the rumors, selling rumors in the marketplace. I think Bill Sheriff was intimating something in one of his interviews recently. We'll answer that, and then and I think so. Generally, these kind of capital challenges moving forward in all areas of the market. So, if you're okay with that, I'm going to start with your one of your areas of expertise, which is like what's happening in the US. We've seen, obviously, last year Inflation Reduction Act. We've seen loan programs. We've seen all sorts of things, but there have been heads of temporary holds. We've seen this across all metals. People are quite nervous about what money is available from the government now. Doge is here, Trump is here, tariffs are here. How are you kind of reading the kind of US market?
Well, the new Secretary of Energy gave the keynote address down at CERA Week in Houston. And he said, we need all forms of energy. It's not a conservation, it's a growth strategy, including nuclear. So all the messages coming out of the Trump administration on nuclear have been very supportive. And it has to do with hyperscale data, whatever. But, no backing off of, oh, no, nuclear we don't need that. It's the opposite. Now, will the funding be there under the Inflation Reduction Act? Anytime you start dealing with the government to move your projects forward, you take on that risk. No indication that I've seen that that's going to be upset somehow. And in fact, I think they want, let's pick on HALEU. They realize that a number of the SMR technologies require that, so they want that to keep moving forward. GLE, even though it's a private enterprise, I think because it's linked to the depleted tails, they're more vocal about going forward. So, now let's move on to the trade side. Obviously, Mr. Trump is focused on the tariffs. And, what I've seen here is he throws it against the wall, as much stuff as he can at one time to try to shake up the global order almost. And that's what he's been doing. I just saw something last night. 70 countries have now come back to the White House and said, ooh, we need to now talk about the whole tariff issue. Okay, so I'm asked, well, what about tariffs on nuclear fuel? Well, in Canada, it was going to be 10%, then 20%, then it's suspended. And, right now, I in my understanding, there is no tariff, but there could be. I mean, every day you wake up and you go, well, what's new? China, different animal. I think that they've put tariffs on China for other reasons. And, the only thing that's really been coming in from China has been more enrichment. It comes in as EUP and then the feed is re-exported. The leading utility doing that, fessed up at the conference in Kansas City because there was a lot of discussion about, it's Chinese EUP. Well, no, it's a SWU component. Probably, possibly, likely Russian SWU going through what's called the Chinese laundry and coming into the U.S. Well, I think then Trump turns that off by putting a big tariff on it. Now, there is a tariff on fabricated fuel, but I don't think we want to get into that. So that's kind of the tariff situation, which is fluid. People are saying, okay, what does this mean? And I go, I don't know. I mean, again, it could change overnight when the White House goes, oh, yeah, we're going to exempt this. Oh, no, we're going to include that. So trying to get a handle on that's one of the reasons the utilities have backed off of term contracts. Now, it gets even more interesting. You probably saw on April 15th that Mr. Trump put out an executive order on a Section 232 trade investigation under the Trade Expansion Act of 1962. Critical minerals. Okay, well, we get a lot of them from Beijing, which apparently they've stopped shipping some as a retaliation. But if you read through the executive order, it's critical minerals, derivative products, and also uranium. So it like almost got stuck on there, not at the last minute, but so then quickly we back up to 2018, 2019. There was a Section 232 trade investigation, which looks at the national security implications of the importation of commodities. Now that was, and it runs, just so I know timeline, 90 days for a preliminary report to go to a whole bunch of departments, and a final from the Secretary of Commerce in 180 days. So we're now looking at October to have a final outcome. The previous study was uranium only. And I just this morning looked at what was the state of the uranium business here in the US. It was bad. I mean, almost no production. It had been going down. So that study went on. A lot of time, effort, resources, meetings, discussions, inputs. There was a production cost study done for the utilities. And the direction it went was to put a requirement that the utilities buy a certain percentage of their consumption of U.S. sourced, U.S. origin uranium. Now, that I think was to start in 2020 at 5%, but by 24, it was supposed to be 25% going forward. So if that had been accepted by the president, which it wasn't, they concluded that yes, uranium imports were a threat to national security. We weren't producing anything. Even though that was the case, the president at the last minute decided not to implement that Buy American policy. Now, there are a lot of rumors on how that happened, but won't go into that. Now uranium is a subset of a much bigger study. So will it be, not as voluminous, not as detailed? And the other thing is the industry is different now. We have restarts. We have contracts being signed at 60, whatever, $70. Encore, 12 contracts. Those were all U.S. We have Energy Fuels with contracts. We have, Your Energy with U.S. utility contracts. So it'll be interesting to see, is there going to be a strong move to require the utilities to buy more? Don't know. Will Trump put this in as a tariff? Well, let's put a tariff on everybody for 10%. So again, to me, it's another issue that the utilities will look at and go, hey, I don't know if I should be signing new term contracts. So, you can't predict what the outcome will be because it's linked now to all the critical minerals, which is a different story. We don't produce a whole lot of critical minerals. So it'll be, an interesting exercise, but who knows?
It kind of feels, well, there's a few things there. I think energy, the phrase you used, Trump's throwing a lot of mud at the wall and sort of seeing what sticks and kind of shaking things up, your phrase. And that may well be the case. He's certainly got a lot of people like knocking on the door trying to renegotiate or the agreements between these countries and the US. I think more worryingly is the inclusion of uranium in terms of being bolted onto some critical minerals list. One, it's a list. What does it mean? Two, if there's a big kind of much bigger review going on, is that what does that signal in terms of the time that will take? And as you said, how much time will be allocated to uranium and the nuclear cycle in that? Will it be meaningful? And I guess at the end of that, and there was the so what bit. So what does that mean? So what then happens? So if I'm a utility, Of course, I'm sitting back and waiting to make decisions. Of course, I am. I've got other energy solutions which are going just fine, thank you very much, without this confusion. So, of course, I'm going to take my time. And then, therefore, we, sort of upstream uranium companies, are thinking, well, that's not good. How does that affect me? It affects pricing. It affects access to capital, the cost of that capital. Will these utilities ever give me the kind of term contracts that I need? And when do I start getting in control of this? When's it a true seller's market again? Because if there's no buying, it doesn't matter that there's no supply. It's not a seller's market. You can't drive the price up if there's no discussion going on. So, again, I mean, from the conversations or anything you may have heard in Montreal from the utilities over and above what you've already said, did they feel any pressure? Or is it the fact that there's no point going now because we may put ourselves in a financial disadvantage later down the line, and we do have 3 years worth of inventory, so we can wait a little bit longer? In which case, how much longer? You hear anything?
Trust me, they want to fuel
not uranium. I'm talking energy generally.
And that's what I'm saying is they need to fuel those plants. Nobody's going to go upstairs at a utility and say, "Oh, let's fire up all that gas and let that big reactor sit in an care and maintenance mode." That won't happen. So don't even put that on the table. The question is, when do they move based on the uncertainties they see in the market? Now, a number of them suggested they're positioned to move fairly quickly. In other words, they're not ignoring uranium, but they've done ongoing market research, who's got what, where, when, to some degree. And, like I said, in Montreal, it was, RBC, it was UX Consulting, it was Cameco, it was, you name it, all saying, hey, we're waiting on you, Mr. Utility, to make those decisions. And again, I think the fact that the suppliers aren't dropping their prices suggests they need $80 plus. So time is to some degree on their side to just wait. Now, they can't wait for 5 years. Some of them may just disappear, which will make it worse for the utilities. As has been pointed out, that unfilled requirements curve gets steeper and higher as you push off your contracting. And it's a very big number starting around 2030, just in the US. So, it's like you can keep waiting, but it's not, again, the UX presentation in Montreal, the president made the point that he doesn't see lower prices coming because of inflationary pressures, market fundamentals, trade issues. So you can keep waiting, but that 80 isn't going to become 60. There's no way. And the burden is on the fuel managers to make sure, they're building the fuel for 3 years out already. So, that they take a long-term view, but they just don't want to be, because when they come to the market, they will come, believe me. It won't be just dribbled in. So
Jonathan Hines says, right, don't worry, it's all good. Supply is an issue. The producers or potential producers, or whether they be producers, restarts, advanced developers, they're holding fast. They're saying, not a chance will we drop from 80 down to some other ridiculous number. Then the number may as well be 100, right? Would that
well, I
be a
think
barrier?
once it starts to move up, then some of them will take action.
Right.
But the fact that it's been flat, but they haven't been signing contracts. So they're just, again, a pause in the term contracting market.
But who hasn't? Utilities haven't.
Utilities.
Because they're not, or is it in the hands of, I want to see where the power lies, or is it in the hands of the wannabe producers?
So far, I'm aware of one restart that's been doing a minimal amount of contracting around the 80. and a greenfields producer is rumored to be showing some volume around 80, but I think it's small volumes. So the utilities say, well, the price is like 80. It's not moving up. I think if they do get offers from others, they're not at 80, they're above that. And they're going, well, too high, don't know where the market's going, what about Kazakhstan? So again, they basically take a road of more caution, which some of them don't understand that's a decision. So that's where we are. They haven't been signing contracts, meaning the utilities. So
right. Okay. Like I say, it is a supply story. Then
yes.
if we then look at what's happening just sticking with the US, right? Okay, the production in the US is negligible. I don't know what it is. Would it be £1 million?
Oh, I think it was a little bit more than that first quarter.
Right.
Maybe 2. Yeah, the general sense is we can go to 8 to 10 in the US reasonably, but then there's I just looked at it that the ISR only. The supposed nominal capacity is 36 million pounds. Now that's, you are whistling Dixie, as we would say, on some of that, but, they can look at that and go, hey, low cost ISR. And
I guess my issue in that we coulda, woulda, shoulda type conversation when it's currently at somewhere between 1 and 2 is we've seen Peninsula fall over. We've seen Encore really struggle. We've seen UEC not do anything, not produce pounds. We've seen very little coming out of the US, and it needs £50 million sort of demand just for the US alone.
Give or take, yes.
Yeah, right. So they're ways short of the reality, the actuality versus what they need. And if we go into the world of coulda, woulda, shoulda, I think that could be problematic. I was talking to one of the uranium CEOs recently, and we're talking about the Red Book numbers, which came out a week ago, 2 weeks ago, something like that. And the data in there is from 19, that'd be nice, 2021. And it is, you look back at the sort of estimates from then to the reality of now, and COVID aside, they're not just missing targets; they're dramatically, significantly, and any other word you want to throw in front of that, missing their targets. So there's something wrong, which is, yes, there's a kind of financial component to this, and people are playing the spot game. There's a supply problem here because there's not been enough investment in exploration companies. There's not enough skill left in the space to actually get things into production when people say they're going to get into production, at the volumes they say they're going to get into production, at the cost they say they're going to get it into production, right? So there's a few things to worry about, right? Which is all good, by the way. This is all a good conversation because scarcity is a real opportunity for contrarian investors or brave people, smart people in a moment like this. So it's all good. But I'm just saying all these problems are opportunities, but all these problems are a problem too. So what the heck the US does about it is what I'm interested in, and why the politicians are moving slowly and why utilities are, quite rightly waiting to see what the politicians do for them is all part of the fun and fancy of the fair here, where us at the uranium end of this are going, we need help. We need the rest of the sector kind of gets act together. And it just doesn't seem to be. There's no leadership in all of this. In this tiny little space, do you think it would be easy to kind of create some sort of leadership position in this? It's just not happening.
Yes. A couple of comments. I've gone back because I've been around a while and looked at the last expansion in the U.S. Driven by conventional mills. ISR was not really a factor in the 80s, early 90s. A lot of the projects were built by big oil, Mobil, Exxon, Getty Oil, you run down the list. They were all in the uranium space. A number of them were utilities. Okay, the 3 existing mills. White Mesa was Swiss utility money. Shooting Canyon was a U.S. utility. And Sweetwater in Wyoming, U.S. utility. So, the utilities were funding exploration, production. Commonwealth Edison bought Cotter Corporation here in Colorado with a mill in South Colorado. None of them are around. No big mining companies. There was United Nuclear, Rio Algom, you name it, SMDC. So we don't see that now. So it's a different complexion. I bring that up and get, oh, no. But look what's happening outside the U.S. Look at Uzbekistan. We've got Orano in there and Itochu. They are now a partner in that development project. So we're starting to see some of the consumers, China, still out there wanting to invest anywhere and everywhere. So we have kind of, as you say, the disconnect where the U.S. utilities say, not my business, I'm not a miner, I'm not, so they're kind of not even considering any of that. That, well, the uranium has always come. It's always been there. There's always been pockets of inventory. We had the Russians. You got to love them. And that's, again, part of the reason why they've stepped back a bit from the market is if there's peace in Ukraine, however that looks, the Russians will come back into the Western market. They were in Montreal. And so, they're not hiding out. They can't come into the U.S. very easy, or into the EU or UK. But there's a sense, well, maybe I don't do 20, 25%. Maybe I do 5 or 10, but that will help set the market. So if you're, again, a Western supplier, you go, okay, let me look at all those factors. And why would I try to cut out part of that market where historically the utilities, as they should, have been looking at the most economic sources, and the Russians have always been cheaper. You could buy, except for the suspension agreement, and now the ban and all of that comes into play. But, well, the ban, maybe it stays in place, but we get waivers long term. Who knows? I mean, so again, that's just another factor that comes into play that kind of puts them on the sidelines for the time being. And the guys that are starting up, like I said, Encore, 12 contracts already. Energy Fuels, I think, has 3 or 4. Your Energy's got some. So, they're kind of in the U.S. market signing what are supportive contracts. That's another thing we need. Every time a utility does a contract, there's somebody on the other side that are agreeing to it. So it's not just the utilities, taking advantage necessarily. There's somebody out there willing to do it or have been in the past. So, yeah, are they assuming a risk on their future fuel that is potentially significant? I think yes. We haven't talked Kazakhstan going all Russian, all China, they just signed a contract with the Czechs. So that portion of Kazakh output available to the West, I don't think it's going to get bigger, and as those contracts expire, probably will get a bit smaller. So you go, well, where do you go? Northern Athabasca? Could, but those projects, at least Rook, seems to be moving out a bit because of permitting and, but they look at all those factors and they go, okay, well, I can't really make a decision or a recommendation. So let's wait for market signals. Okay. Well, I contend that when the market signals, you might be too late. We may blow through 80 into the 90s. I know people are saying, what are the marginal cost profile out on the top of the curve? 100? Why not? Could be more. Easy. I mean, there's nothing magic about 80. It's just that the buyers don't like that number. So, okay.
But yeah, they don't like that number, but they're not going to like 100. They're not going to like 120 either. Right. But if you've got no fuel alternatives, and we're focused on uranium here, but obviously, the enrichment is part of that. And I do want to talk about that in a second. It's kind of neither here nor there. or there, the pricing in reality, if you run out of this stuff or nearly run out of this stuff, right?
It's
But when's that realization come? Because as you said, it might come when it's too late. And I find
I
that.
think it happens. I mean, it's almost too obvious. It's closer than it has been in the past. But again, the sense in Montreal was more of a, fuel, yes, uranium, you really better start looking. Their needs. And we didn't get into like grassroots exploration.
Okay.
Now with operating license extensions and, these units are going to operate to 2050, 2060, some of them to, end of the century. Nobody's doing grassroots exploration. And who's going to pay for that? And where are you going to get the people? And, so I mean, there's some fundamental issues. If you're a reactor operator, and let's just look in the US, some of them have done their homework. They've been doing contracts. I won't name them, but you can one hand probably. And others that just say, I look at the Red Book. Just so you know, the Red Book, don't, take it with a huge grain of salt. So that's all I'll say about the Red Book.
I said it a bit more obviously than that earlier.
Yeah,
week.
I figured
Believe
you might
me.
have.
Yeah,
it's an interesting thing, I think, for historical production and resources and all that, but for future production, it doesn't do much for you.
Hold your nose when you're reading it. It's not good. Let's come back to that conversation. When I said we talk about conversion, right? Has the States, has Europe, has anyone ex-Russia done anything about that that's going to have any impact pre-2030?
Well, I think as we've talked, the only project that we're hearing anything about is Springfields in the UK. Had a UF6 conversion facility, 6,000 tons per year, shut down in 2014 when Cameco, that had an option to utilize it, decided the market wasn't calling for that conversion. And now the word in Montreal was that it looks like they may make a final investment decision fairly soon, but the plant, which would be 5,000 tons for the natural UF6 side, there'd be another 5,000 dedicated to reprocess material and things like that. Really can't be in operation until 2030 or 31, even if they start today. The conversion panel in Montreal basically put the message out. Other than that, be it the US, Canada, or France, nothing is going on expansion. So, the Russians, if they come back in the Western market, sure, they can kind of help address some of that issue. But other than that, it was commented on that it's still the pinch point going forward. And, there's nothing going on.
So what's going to happen here? Does America think it's going to start, despite its tariff conversations, does it think it's going to start collaborating with other Western groups like the UK, the French, to kind of solve these energy problems? Because I have this view that people who kind of call for these collaborations are the ones who need it most. So how's this all going to come together? Yeah, why don't we share that food that you just made? Let's do that. How's it work in this space? Because there's no one country that seems to have all the answers, and maybe collaboration is the way forward. But do you think it'll happen?
Well, that's kind of the battle cry now, is collaboration, countries, companies, we need to work together. And that, yes, how can you say that's not true? But you don't see a whole lot of that. I think you do an enrichment. You've got several countries involved there. Not too many companies, but not too many companies can participate in it. Conversion, the fuel cycle depends on the customer's support. And that's what will move it forward. Governments can come in and say, we'll help on regulations, we'll make it somehow easier, maybe provide some funding like we see in the US. I see Sweden, they'll come in, supposedly the proposal, help fund new reactors. So we're starting to see some of that. But the fuel cycle, yeah, we get together and kind of talk, and then everybody goes away and tries to keep their own company going. So, it's really driven by the customers, and when do they send the right signals to the supply side, which they've done in enrichment. I mean, just quickly on enrichment, that was probably the panel that showed the least anxiety, because we have Urenco moving forward, Orano, although their new plant in the U.S., not clear timing, and GLE, we now have the laser guys, we can be out there by the early 30s. There doesn't seem to be as much anxiety over the enrichment side, but again, enrichment has gone from $60 to $65 up to $130 to $150.
Yeah,
and the utilities are signing contracts. So,
I was about to say, when you're making a huge margin, you do get a little bit less stressed. They're fine. There's no big capex programs lined up. There's a huge market for this, and they can pretty much get to the point where they're going to charge what they want. So very stress free.
Yeah, it is interesting though. If you go back, there was a presentation by Urenco 3, 4, 5 years ago, and they said publicly, we need at least $120 for a sustainable enrichment segment. So now what is that? It's probably 130, 140 now. So it looks like, they're making a big margin. I don't think so. That $65 SWU price in the spot, there's like 800,000 SWUs transacted a year in the spot market. It is nothing. So somebody could come up with that and sell it. That's not reflective of Urenco or Orano, whatever. So that's why they weren't doing anything. They weren't replacing centrifuges. They weren't building the new facility in Idaho. You name it, they were going nowhere, and they made it very clear. So
yeah, it's getting messy out there. It's getting messy out there. And talking of messy, I want to kind of deal with that kind of rumor out there. And I asked John Shane Pagley about this yesterday. So the rumor is that Sput has come up in some kind of agreement to sell pounds to utilities, and obviously that's even more traumatic than maybe Trump doing a deal with the Russians and flooding the market. So John says no, never sold any. No plans to sell any. They are talking about location swaps, not sales, basically just kind of helping people change title of material between strategic and logistical operations. So that's it. So they hold £66.2 million, and that is what they're going to be holding until they can buy more. So just to clear that up. And in his view, that's been started by people who are shorting in the market, and no validity to it. Now, don't get me wrong. I've had these sorts of conversations with CEOs before. Are you raising any money? And I'm saying absolutely not. The next day, a press release comes out. So take it how you want, but the words came out of his mouth were, no, that's not happening. So don't worry about it.
Yeah, well, a couple of comments. John, who's a truthful guy, I mean, everything he said, I don't disagree with. They likely will have to perhaps sell a bit of material to pay storage fees. I heard maybe by the middle of the year. He said 50,000 pounds a few months ago. So and like he said, that's hardly going to move the market. Now, this idea of them sloughing pounds off into the market, why would they do that if they pick some number, and it would move the price down for the other huge inventory they hold? I mean, the logic just doesn't work. I'm sorry. Now, is there always an end game that, even UPC, when it was still in existence, Peter Farmer, who started it up at Denison, said, yeah, somewhere out in the future, we may then start to sell under term contracts part of that inventory. I don't see that happening in
Not
the
anytime
foreseeable
soon.
future.
No, I agree with
Yeah,
you on that one. Like
yeah.
when Split first came out, it was very clear with John in the questioning, which was, at some point you're going to sell this. Oh no, we'll never sell. That bullshit. Because the point is, it's an arbitrage between what they bought it for and then what they can sell it for. And at some point, that's how you make money. Sitting on this thing in perpetuity, unrealistic business model. But for now, not a problem. There's no flooding of the market. So let's kind of put that one to bed. Okay, so I'm just trying to think some of the other things that gone on. You kind of mentioned obviously Deep Yellow's position on that one. I think that makes sense. Why would you? You talked Russia. Is there anything else in terms of you've been on a roadshow recently as well. I mean, so like people leaning in, new investors leaning in. Are they getting this, or is this just like a maelstrom to them? Is it too much to consider?
Well, yeah, I just talked to a fund yesterday in Los Angeles. I've never met with them. 32 billion, so they're modest size, and they're saying, hey, nuclear has popped up, and they're trying to get up to speed on it. And the roadshow was both East Coast, West Coast of the U.S. Very receptive, very big investor groups. They wanted to understand what the spot market was doing, but no, we're done with this. We're, BlackRock, which had been, exited the industry a long time ago. Now they're back in it with both feet. Let's put it that way. So I think the capital is there, but it's, what's the story? Is it, and we'll have to wait and see. Again, the equities are just not where they hopefully need to be. And then the debt side, I think the banks are probably going to be a bit more conservative. And they want to see that support from the ultimate consumers for some portion of the project. So, it's the way it is. So
yeah, I think it's interesting, but it's been an interesting conversation. I mean, it's clearly a lot of confusion in the market. Like I said, I think utilities waiting around to kind of see the lay of the land before they start making decisions. Fair enough, but it feels like that has been going for 5 years. And as a retail investor, I can sort of empathize and sympathize with a lot of the kind of comments out there, negative or otherwise, but it's a real kind of buying opportunity for me. Congratulations, you're in an opportunity where you can kind of like March 2020, you can buy cheap right now, which is awesome. So if you believe the thesis, great. If you don't, no problem. There's gold is like kicking ass out there, and that's fantastic. So there's lots of ways you can make money in metals, and there's lots of ways you can construct your portfolio in terms of risk profile. But I think uranium is definitely still one of them for us. We're not sellers in this market, that's for sure.
Well, again, this comes up on some of the roadshows. If you look at Yellowcake, who I'm still working with, when we entered the market in 18, the price was 21. We bought 8 million pounds at 21, and a year ago, January, the price was 100. So uranium's dead in its tracks. I don't think so. I mean, yeah, you're going to see volatility, particularly on the spot side, but term was below 40. And now it's at 80, and the customers have stepped back a bit, going, "Ooh, I got too many things on my whiteboard to jump in with." So the fundamentals are better now than I've ever seen them in 50 years. That's not changed, only on the upside, as demand is better. And supply is, as John Borshoff uses the term, broken. I mean, we didn't go through all the countries and what's going on. Niger, I mean, you just run down the list, and as your comment of where is this going to come from? From a reliable, long-term Kazakhstan. Okay, 90-10 ownership. They're effectively going to nationalize the industry. So then what? All it takes is a call from Beijing or Moscow, and they go, yeah, that contract that they did with the Chinese late last year, I saw a number, it's 45 million pounds to be delivered 26 through 30 or 31. That's just one contract they've done with the Chinese, who also own parts of some joint ventures. So, I mean, anybody that doesn't see that coming is just not paying attention. And the Russians, like I said, they're everywhere. So, I don't know. If the utilities want to kind of wait, then they'll wait till some point when 80 is 90 or 95. And then, what do you do from there? But yeah, let me just make one quick comment before we sign off. And this was from the UX presentation last week. And Jonathan Haidt said, in the uranium industry, not yet prepared to handle growing supply gap projected to emerge by 2030. And that's tomorrow in this business. The Kazakhs. New potential production alone is not sufficient to cover demand post 2030. And they're taking into account Rook and Phoenix and, Tariffs and, and going, that's still, even us, we can't produce enough to answer that demand. So you go, well, okay, let's all ignore that it'll come from somewhere. I don't know. I don't see it. I can't find it anywhere. So, maybe it's out there hiding, but I'm not so sure. Still a big inventory, but that's in strong hands now. The Chinese, they're 650 million pounds. They're not going to come in the market to sell it. Trust me. So, but yeah, just the next conference is Sydney in early June, World Nuclear Fuel Market. A lot of the U.S. utilities say they're going to make that trek, which surprised me. So that could turn out to be another interesting fork in the road, if you want to call it that. So, we'll just have to see. But again, not to get them wrong, a lot of the utilities said we want to stay in touch as things change. And, some of them have RFPs on their desk, already approved, ready to go when they decide now is the time. So, but obviously today doesn't seem to be the time, but could be soon. We'll see.
Are you going to be there, Sydney?
Oh, of course. I mean, it's going to be interesting, I think.
I'll see you there.
So, yeah, we'll have more Asians there, and, so we'll have a bit of a different mix, but I think it'll be well attended. So
brilliant. Well, Dustin, as ever, there's always lots to discuss. There's always
well, it's getting more. We thought the list would get shorter, but
we
no
did,
such
didn't
luck.
we? But I'd say I would say this though. I have a lot of empathy with the retail investors when the story hasn't changed. Okay, it's never looked the market's never looked better for uranium, and here we are. 5 years since I've first got involved or re-involved with this space again, and it's been on a few bumps and a few moves, and it's not a straight line. Everyone would prefer a nice straight line. Makes life simple, doesn't it? But that doesn't happen. So folks, bear with us. Patience required. It's all looking good, and at these prices, you should be having fun. So
one would think, yeah.
We
see the light. We see the light at the end of the tunnel. So anyway.
We do. We just hope we're not off to meet our makers. Right. We will see you again soon, Dustin. Cheers very much.
Okay, Matt. Good to talk with you. Okay, bye now.